Hello and welcome to another financial analysis video. Today we're talking about Textron. They are an industrial company who just released earnings and they beat by 2 cents a share. And in a nice move, kind of bucking a trend that we've been seeing, they had a nice year-over-year increase in earnings, approximately 6 cents or just a little more than 10%. Management also raised guidance as well, so another good sign for the stock. And it's going to get some pop, trading at 16 times trailing earnings right now. But taking a deeper look at what's going on, return on equity has really balanced out. Now, there's been some changes in the balance sheet a little bit of increased equity, and that's good. That's because of good performance. So when you see this still staying strong despite higher equity, you know that things are going well. And whenever you're not confident in return on equity, you can look at return on assets, and you could see there the improvement in Textron's operating performance. Now, just like everybody else that's a global company in the S&P 500, we're seeing revenue pressure, and that may not change between now and the end of earnings season, but Textron is able to still see quarter-to-quarter trailing 12-month earnings growth despite that decreased revenue. So management should be credited with that. On the cash flow side, operating cash flow really jumped up in 2014, and while it's swung down a little bit, and free cash flow has kind of gone with it, it's still $578 million on a trailing 12-month basis. Still strong free cash flow. Now, the dividend for this company is the dividend yield is very modest, and the payout ratio is very low. They've had the same dividend forever, so there's really no threat here to the dividend. And in looking at everything else, the other metric here is the increased earnings yield curve, which suggests that the stock has actually traded at a slower rate than earnings over the last year. So Textron is a good company to buy. I think they're in a good position now. Again, they're going to probably get a good pop today with the earnings beat and guidance, but going forward, they could easily, by sometime next year, get back into the 52-week high range. So again, a good company, solid performance, and a good buy. I hope you enjoyed this video. Happy investing.